Hello students, welcome you all. Today we are going to study about a new topic, money and credit. Now, first of all we will try to understand what is money. Anything which is used as a medium of exchange, store of value and standard of deferred payment is called money. Money is something which can be used as a medium of exchange of goods and services. Now, money also acts as a store of value and standard of deferred payment. We will try to understand how money functions this as a store of value, as a medium of exchange and standard of deferred payment. Money acts as a medium of exchange. Money is widely accepted token that can be used for exchange of any goods and services. It is universally accepted. Next, money also acts as a store value. Well, money is considered as a store of value where it can be used as a means of saving and allocating capital in future without deteriorating in value. Money also acts as a standard of deferred payment where deferred payment refers to those payments which are made off in future. Money has made deferred payment quite easier. Right, when money is borrowed, the principal and interest amounts have to be returned to the lender. However, these transactions are not possible in terms of goods and services. Now, we can see some of the currencies that are used in different parts of the countries. Let's see. The first one is the yuan. It is the currency of China. The second one is the yen, which is used in Japan as a currency. The third one is the Sudan's currency called pound. Next, Russia's currency is known as ruble and the Belgium currency is known as Belgium franc. Hope you have found quite interesting in it. Next, these are some of the historical era currencies. You can see from the screen that how the different coins were used in different time period. In the first image you can see the coins which were used during the Akbar era. Next, in the Samudragupta's era, how does the coins looks, and the third, the Tughlaq era, how the coins were looked. Now last one is, of course, yes, it is the modern era currency. The picture shows the currency note of 2000 rupees and 500 rupee note. Now, these are the modern forms of money. Can you identify the modern forms of money? Yes. These are the paper currency, notes, credit cards, right? Debit cards. Very good. See, everything has a evolution story, right? So we will try to understand what is the evolution story of money. Well, initially goods and services were exchanged in terms of the goods only. The system called the barter system. Then the exchange process were done with the use of the metal coins. Then came the paper money. Then came the plastic cards, and finally, as you know, the net banking has already started. Now, a question may arise in your mind that is it possible to perform the functions of buying and selling without making use of money medium? Well, yes, it is possible through the barter system. Now, what is a barter system? Well, you can see on the screen, it is a system in which the goods are exchanged for other goods. Means the goods are exchanged in terms of goods only. Now, it has some drawbacks also. Well, lack of double coincidence of wants, difficulty of storing value, deferred payments are quite difficult, and there are some goods are there which is indivisible, right? Now, well, the rest of the 3 points are clear to you. We will try to understand the meaning of the lack of double coincidence of wants. Well, to understand the meaning, first of all, we will try to understand the meaning with the help of an example. There are 2 examples are there on the screen. We will try to understand this. The need of the double coincidence of want. Well, there is a problem with Ram Vilas. We will try to find it out what is the problem. Well, he is a potter who makes pot and wanted to exchange his pots for some clothes. He visited all nearby cloth makers, but none of them was ready to give the clothes in exchange of its pots. They want something different against their clothes. Now, to practice barter system, there must be a double coincidence of want, right? So, the double coincidence of want is until and unless is not possible when you find a same person who is quite interest to buy your things, right? It is very difficult to find a person who can fulfill this condition. There is no common value of exchange in this system. Say suppose someone wants to buy gold in exchange of rice. So do you think in this case the value of gold is similar to the value of rice? No. Well, this is the main problem in the barter system. Now all the limits that we have in terms of the barter system has gave rise to the evolution of a new concept that is called the money, right? Money has fulfilled all these problems, it has solved all these problems. We will try to understand what is money. Well, it is also known as currency. Currency includes both coins and paper note. It is the currency of paisa and rupee is generally accepted as a medium of exchange in India. Well, paper currency notes and metallic coins for denomination of 2 rupees and above are generally issued by the Reserve Bank of India, that is RBI, with the permission of the Finance Ministry of Central Government. At present, it issues the coins and the notes of rupees 2, 5, 10, 20, 50, 100, 200, 500 and 2000. Rupees 1 and its subsidiaries are issued by the Ministry of Finance. It also issues the coins of rupee 1 and 50 paise. Hope you have understood what is a currency. Now, we will try to understand how does this currency flows in the economy. Well, this is mainly done by the banks, right? People deposit their extra money in bank by opening an bank account, right? Bank also provides interest to the people on their deposits. People also have the provisions to withdraw their money when they needed it. Since this money is withdrawn on demand, hence these deposits are also called demand deposits. Now the customer can demand their deposits with the help of check. Now what is a check? We will try to find it out. Well, you can see a illustration of a check. Yes, it is a written document with which a depositor orders his banker to pay a certain amount to himself or to the bearer or to a certain person, right? Okay. Now, the customer can also ask for loans with bank. Now, they can ask different types of loans, and in which the banks also provides loan. It can be the personal loan, business loan, mortgage loan. Now, we will try to understand what is a loan. Well, a good term for loan is credit. Credit refers to an agreement in which the lender supplies the borrower with money, goods, and services in return for the promise of the future payment. Now we will try to understand how these loan activities are done by the bank. The bank maintains only a certain portion of the deposits as a cash with them, and most deposits are used to extend the loans. Right? People may require the loans for their economic activities, right? To fulfill their needs, right? Suppose somebody wants to buy a house, somebody wants to buy a car. At that time, they may ask for loan to the bank. Thus, the banks make the use of these deposits which were done by the customers to meet the loan requirements of the people. Now, banks charge a higher rate of interest on loans than the interest they pay on the deposits. Means the rate of interest that the banks charge while giving the money as a loan to the customer is quite high than the deposits that are done by the customer. Now the difference between the amount of interest received and paid is their main source of income, that is the income of the bank. So you can understand that how much clever a bank is. Now banks used to provide loans on several terms of credit. Now what are they? We will try to understand. First, collateral securities. Now what is collateral? Well, collateral is an asset that the borrower owns, such as land, building, vehicle, livestock, deposits with bank, and uses this as a guarantee to the lender until the loan is repaid. Next, documentation is quite required. Next, the terms of loan. Next, the mode of repayment and the rate of interest. Right? Now, we will try to understand the two different credit situations. Well, we know a large number of transactions are carried out into day-to-day for activities involve the credit in some form or other. Now, let us try to see how the credit works through the following examples. Well, these are two examples that has been taken from your NCERT book, right? In the first case, Salim obtains credit to meet the working capital needs of production. The credit helps him to meet the ongoing expenses of production, complete production on time, and thereby increases his earning. That means in first case, credit therefore plays a vital and positive role in this situation. In the second story, what we can find it that in Sapna's case, the failure of the crop made loan repayment impossible. She had to sell part of the land to repay the loan. Credit, instead of helping Sapna, improve her earning, left the worse off. This is an example what is commonly called the debt trap. Now in this situation, the recovery is quite painful for Sapna. Well, you can understand from these two examples the positive side and the negative side of credit. There are two sources of credit in India. One is formal sector credit and another is informal sector credit. Now, what is formal sector credit? Well, commercial banks, cooperative societies, regional rural banks constitute the formal sector of credit. The RBI, that is the Reserve Bank of India, supervises the function of the formal sources of loan. They collect low interest. Next, collateral security is required in case of the formal sources of credit. They follow some well-defined rules and regulations and procedures in order to provide the loans to the customer. Next, What are the informal sources of credit then? Well, the informal lender includes money lenders, traders, employers, relatives, and friends, etc. There is no organization which supervises the credit activities of the lender in the formal sector. They collect high rate of interest. They do not follow any rules or procedures. Well, you have known about the two sources of credit. Well, in which sources you will go for? Yes, we will go for the formal sectors for credit. But there are some problems. See, on the screen you may see there is a question that why are the banks not advancing the loans to the poor people if they know that there are many problems in the informal sector? Well, to know the answer, let's find out. Poor people do not have anything to offer as a collateral security, which is very much required in terms of the formal sector of credit, right? Banks are not available in many rural areas. Banks do not consider poor people as credit worthy. Poor and ignorant people find it difficult to produce the needs of the document. This is the reasons why banks not advancing the loans to the poor people. Now, there is one group which helps the poor people in order to fulfill their dreams. That is called the self-help group. Now, let's see what is a self-help group. Well, self-help group is a modern form of financing the small finance needs of the borrowers who cannot obtain the loans from the banks because of their inadequate financial documents and lack of collateral. Now, these self-help group consist of 15 to 20 members. Now, basically, these members are the women from the neighborhood. Each member contributes some money that promotes small savings among them, and the amount so collected is utilized to lend it to any member who needs it. Right? Now, members are small amount. Members can get the small amount as a loan from the group. The rate of interest is low and it is decided by the members. Terms of credit is much easier as compared to any other forms of finance. It helps extensively in saving the poor from the debt trap, what we have found in the previous slides. From the debt trap of the formal sector, after 2 years, the group can get the loans from the bank. Now, this self-help group also provides a helping hand to the women in the rural areas also. This self-help group are the building blocks of organization of the rural poor. Not only does it help the woman to become a financially self-reliant, the regular meetings of the group provide a platform to discuss and act on a variety of social issues such as health, nutrition, domestic violence, etc. Now, we have came to an end. Let's sum up what we have studied in the entire chapter. Well, in this chapter, we have looked at the modern forms of money and how they are linked with the banking system. On the other side, the depositors who keep their money in the banks, and on the other side, the borrowers who take the loans from this bank. Economic activities requisite loans or credit. Credit, as we saw, can have a positive impact or in certain situation makes the borrower worse off. Right? Remember the two examples. Right? Credit is available from the variety of sources. This can be either formal sources or informal sources. Terms of credit vary substantially between the formal and the informal lenders, At present, it is the richer household who receive the credit from the formal sources, whereas the poor have to depend on the informal sources. It is essential that the total formal sector credit increases so that the dependence on the more expensive informal credit becomes less. Also, the poor should get much greater share of formal loans from banks, cooperative societies, etc. Both these steps are important for the development. Well, I think you have enjoyed the class. Thank you very much.